everyone, and welcome to today's Savvy Investor webinar, Investment Content in a Post-Coronavirus World. This webinar first aired live on our webinar platform in March 2021, so if there's any references to any resource downloads or the Q&A box, that would be why. You can still access these resources in the description box below, and there's also a link to watch the webinar on demand on that platform. We hope you really enjoyed today's session, and I'm going to hand you over to our CEO, Andrew Perrins now.
Thanks, Lucy, and good afternoon. Well, it's been an exciting month for Savvy Investor. At the beginning of March, we were named by the Financial Times as one of the fastest growing companies in Europe in their annual FT1000 survey. And today is the launch of our investment marketing webinar series. We've been delighted by the response, with over 300 registrations. So welcome to one and all. It's great to have you with us. From next month, we plan to start offering sponsored webinars to companies. Essentially, it's an opportunity for you to use the reach of Savvy Investor and our 50,000 plus membership base to deliver your content and ideas directly to institutional investors. To find out more, if you're interested, please download the webinar's media pack that you see to the left of the screen, alongside some of the other resources that we think you'll find helpful. Well, I guess Savvy Investor is uniquely well positioned to commentate on content trends within the institutional investment community. With over 25,000 content downloads from the Savvy Investor site every month, our platform really does provide a rich data set, which enables us to identify trends and to understand how investors engage with your content. Today, Ximene Weaver, our head of content and marketing, will share with you some of our latest insights. Ximene is joined by a fantastic panel, Nick Pilkington from White Marble Marketing, who brings a best practices and consultancy lens to the table, while Andy Bailey from Seismic talks to the operational perspective together with sales and content enablement. So without further ado, let me hand over to Seb Colpin-Scott, our editorial director, who is hosting today's panel and Q&A. Seb, over to you.
Thank you, Andy. Right, so let's kick things off. We aren't quite in the post-pandemic era yet, but there is still a lot that marketers can learn from the pandemic. So let's start with you, Zim. What trends have you seen emerge during the peak of the crisis, and how have they continued into 2021?
Thanks, Seb. It's a great question, and it's definitely something that the team at Savvy have been asking. In fact, when we got towards Q4 last year, we said, was coronavirus a content watershed moment? How has it changed the landscape, and will it change immeasurably? Is one of the questions that we really took a look at. And so in order to figure that out and ask, we actually thought, okay, let's review all the trends that we've seen over 2020. And as you can see on my slide here, there are three core things that we observed. The first was a shift in tact, and we're talking around sort of February onwards. We saw long form content drastically reduce from our asset manager partners and our supporters there. Short form really increased, and overall we're gutted to say that actually the quality did substantially decline on that note as well. The second thing that we saw was a big uptick in volume. Now, as investors wanted more and more content at a faster pace and on intraday movements and all the changes we were seeing, articles increased by roughly 50%, videos by 30%, and podcasts by a whopping 275%. And clearly that was because people were adjusting to working from home, they weren't using their studios, and this was a great way to mix up their content and get to market fast. Finally, we saw a huge focus on face-to-face interaction. Now, webinars up until this point, we did have them on site and we did see our partners provide them. However, we they weren't used in the way that we have all seen the sort of advent of webinars as a result of coronavirus. And our webinars on site actually increased by 300%, which was far more than many of us, I think, were expecting. So I guess that's what we saw then, but have we seen that carry on? And the answer to that is yes, in part. So from Q4 to Q1, we have seen a mean reversion of sorts. Long form is back, and we're really happy to see it. The quality factor, as I say, has also improved. So short form is much better. It's sort of more put together. We're seeing it visually better as well. And long form as well. It's nice to have it back, and it's a lot more thematic. It's a lot more looking forward to the future, which is something we were really lacking last year. And finally, webinar quality as well, massively improved. I think many firms out there, they've got the technology in place. We're all used to the do's and don'ts of webinar recording, so to speak. And so we've seen that massively improve. As a result, we've been able to forecast some emerging trends, things that we think that asset managers and service providers should be really bearing in mind as they begin to execute on their 2021 strategies. And there are another 3 key things that we recommend. They are this shift that we've seen away from long form onto short form and then back again onto long form, is we think that we're going to see a big move from lightweight reactive content, as we saw in the peak of the pandemic, onto the more thematic stuff, because investors just, I think there was probably a bit of fatigue, content overload, and they now are looking to the future. They're looking towards the outcomes of corona. Secondly, it's shelf life for mileage. Many of us know how budgets are being reallocated at the moment, and we're thinking about how savvy we can be with our money and with our marketing allocations. So ROI is more important now than it ever has been. So focus on evergreen content, 3 to 6 month shelf life. Think about where you can do series or pillar content and flagship content that really has a lot of legs. So it works harder than you might want to, and it really gives a bang for the buck, so to speak. And finally, we think that as a result of everyone moving into this digital environment, data will absolutely deepen, and we hope that data will breed better content, and investors out there will be aware of this. So we want to see marketers responding to the data that they're able to acquire as a result of the performance of their content.
Excellent. Thank you for talking us through that, Zim. Some very interesting points raised. Nick and Andy, is there anything you'd like to add on that? Obviously, Nick, you're an artist in terms of content, whilst Andy, you're more of a mechanic. Are you guys seeing the same sort of trends play out that Zim has outlined?
Nick, do you want to take that first?
Thanks, Andy. That's great. Absolutely, yes. I mean, I think all those points in terms of the quality and the planning of the content, and there's I think it's pretty interesting just to look at that from the internal perspective for asset managers, that all of this has driven a clear recognition that content is now a need rather than a luxury that it might have been before. The salespeople, they need a reason to call people. They need to make sure that there's the activity going on, that they're staying front of mind, and then they need that crisp articulation of why clients should give them the time in a meeting. They need to be able to send them something to secure that time. And all of that, even just in that narrower sales remit, has created a focus across the content spectrum on what is it actually for? What is any piece of content going to deliver? What's its role in your marketing and sales plan? And aligned with that and the external perspective, and tying all of what Zim was saying together, is that sort of broader focus now on the client experience, on how the content is being distributed, how users are consuming it, and the infrastructure and the tech that you need to deliver that rich experience. So first of all, yes, you mentioned about the rich mix of content. We've seen that in data terms on social as well. So we have a benchmarking tool of asset managers' digital marketing, and we've seen that just consistent use of text and image-based posts gets the lowest engagement. And in fact, the key is not any one type, but the variety. So yes, you need the consistency for your posts to be recognizably yours, but actually what determines success is using the variety of media to mix up your posts so they don't all look the same and that any fatigue will creep in. And the other thing on that front that I think is of interest is the volume. We've seen that broadly posting around every other day seems to be the optimal for the best results. That's striking that balance, I guess, of visibility and presence versus overload. And then around the sort of mix of content as well, for everything that that you might be publishing, the importance for that rich experience of thinking, well, you know, what happens next? What do I anticipate that a client would want to read as the follow-on piece for this? If you've enticed them to read something, you then need to work out, well, what can I do either to serve to them or to send them later that's going to pull them along that marketing funnel and your content journeys. And if you can create those really slick journeys that therefore lure people into your array of content, just think how powerful that is in terms of cementing their perception of your credibility. And you know, ultimately that's what all this is all about, really, isn't it? And what's exciting now is that in the data context that you mentioned, we now have the ability to track and trace that and therefore to be able to prove it. And you know, that's very exciting. Andy.
Thanks, Nick. Yeah, a couple of very interesting themes there that I think we'd certainly agree. And Zim actually mentioned at the beginning of her piece about there being a content watershed, and we actually have some data which can substantiate that. So our platform is all about, you know, driving content that allows asset managers and their customers to take action. And we saw through the last 12 months, so January 20 to January 21, an almost 600% increase in platform usage. So we have over 200 asset managers on the platform. Very happy that they trust us. And one of the primary reasons, and that specific area, the 600% increase area, was really about the way that you can distribute and measure the way that content is consumed, both individually, but also at an aggregate level. So for marketeers, that's, as you can imagine, very interesting. Nick and Zim, you both mentioned obviously personalization and the ability to take content and craft something which is not only broad in the context of your sort of brand messaging, but also being able to sort of have much more personalized individual interactions with clients. And again, the technology capabilities to be able to deliver that has been very much in demand. So again, slightly lower number, but way over 300% in the way that our customers are using personalization to reinforce their messages and also engage their customers, or their clients, I should say. So a lot of the relationship managers within our base are now, I think, almost asking that they can have a mandatory interaction with their customers, which is data-driven as opposed to, I guess, sort of static content-driven. So yeah, we are seeing lots of data which supports that. The final thing, and Nick, I think just to pick up a point you made, the drive towards social. So that's, I guess, the third prong of the change that we've witnessed. The ability of, or rather the ability for our customers to be able to craft a very specific set of different social channels, each of which has got a slight, I would say, edit when it comes to the messaging based on the channel and the format. Again, we've seen a huge uptake in that. And I don't know how much of that is, I guess, COVID driven, but my guess, my personal opinion, is that it was a catalyst for that step towards more social selling. You know, we'd seen a lot of reticence towards that until a year ago, and now it's probably the market that we're seeing the most action in.
Thank you, Andy. Well, and thank you, Nick. Some very interesting points raised there, and it's very interesting to hear from different people's perspectives and views. So moving on now, obviously during the crisis, the world became saturated with content. And even now, it's still very hard for firms to stand out from the crowd. So let's start with you, Zim. How do investment firms differentiate themselves against this new world order created by the pandemic? Is there anything firms can do differently? How do they stand out?
Absolutely, Seb. I mean, it's a great question. It's something that I am asked all the time as a part of our service to our partners. You know, what can we do? What are other people doing that's better than us? How do we stand out in the sea of sameness? Because we've all got the same goal, don't we? You know, attract and retain through content, essentially. So looking at our platform, which has access to a lot of engagement data, and also looking at the knowledge that we understand about our partners and our behavior, their behaviors and their content traits. There are, this year for 21, there are sort of 5 key things that we're recommending, and they are really based off some of those key learnings that I mentioned earlier. The first thing is showcase your non-consensus view. It was very difficult for firms during the pandemic to say anything different from one another, because we all felt the same. We were all quite apprehensive. We all weren't really sure where it was going, but we knew that it was something to consider. So now is the time to make those views shine. Sing about it, celebrate the fact that you are not thinking or positioning your portfolio in the same way as someone else. And that will be the angle at which you can really pivot your content strategy this year. Secondly, it's creating that multimodal content. So one of the things, as we've heard, you know, social media's really improved and changed the game of things. And also because we were desperate to get shorter content out faster to market, it means that investors' approach to what they like to consume has changed somewhat. They are used to shorter content, but doesn't need to mean to say that it always needs to be short, but figure out how you can create shorter elements within your longer form content, for example. Use use scannability techniques or visuals to enhance the way that your content looks and feels. And I'm talking pull-out quotes, bullet points, graphs, charts, and also other interactive things. How can you make something move? How can you make something dynamic within that content? And thirdly, it's flex your content style. And that comes from the same point, because where we've seen shorter content come to the fore, people are also far more used to less formal content these days, because we just weren't producing the stuff to the sort of expectations that we were used to previously. Academic writing is a bit passé these days. So perhaps you could start producing your long form white papers in a 2-columned article approach. It's a little bit more laid back. And that might start to resonate with a different type of audience, perhaps, or start to feel a little bit more different and sprightly and engage your audience in a different way, which is always something, you know, to surprise your audience is something that we always recommend. The next thing is, of course, content fatigue is real. I mentioned it previously. We've all talked about it. The world was saturated with content. So bear that in mind when you're thinking about your strategy. Do you now need to produce 4 pieces of content a day, or can you find bigger ticket pieces that will get more bang for your buck, that will get people more engaged and more interested? Think about the user journey. How many touch points does your audience have with you on a daily or weekly basis? And then finally, Andy also mentioned it, you know, personalization is it has been the name of the game for many years, but it's even more so now. Personalization along with accessibility, because it plays to all those other differential points that I've mentioned. So think about how you make your content even more accessible to the person that it is truly determined for. So I know that many of asset managers out there will have sites dedicated to institutional investors, retail investors, for example. But can you go deeper? Can it be for insurance, for people interested in DC pensions? How much more can you signpost your content so that the right people get their eyes on it as soon as possible and they know it's for them? Because that way you are more likely to get people looking at the right content and they begin to appreciate your brand a lot more. So there would be my 5 top tips there.
Thank you, Zem. No, thank you for outlining those 5 top tips. It's really given us some food for thought, and will hopefully give people some thought-provoking ideas and help them change the way that they're consuming content or promoting content. All right, so Nick, I know that previously you've mentioned that it's not just about content quality, but about the distribution. how can firms ensure that their content ends up in the right hands?
A very important question, and there is clearly a technology-related element to this, but actually one of the biggest enablers for that to work is the fundamentals of what happens before that, which is the effectiveness of your segmentation. That is an absolutely crucial forerunner to any form of successful distribution, particularly trying to get it into the right hands, as you ask. And so that segmentation needs to therefore take into account for the audience that you're going after, what are their media habits and hangouts, as well as their needs and investment priorities, etc. And all of that needs to play through into your CRM. Now, this might sound a little bit kind of yesterday, but actually we see a lot of groups still not quite getting over the line on this. And in our benchmark of asset managers outbound email, half of the emails that we as an industry are sending out are still going to an undefined audience. So there's no segmentation of that audience or customization of the content specific to a particular client type's need or priorities or the state of your relationship with them, to make sure that then the content itself has the right messaging. To a lot of those points Zim was making, the right messaging, the right tone, etc. So, a fundamental part of the question, how do we ensure it's getting into the right hands? Well, we've got to make sure we're sending it to the right people in the first place. And then I really like that. And, the signposting element, enabling your audience to find the content that's right for them. If you've succeeded in getting your content in front of an investor, each one will have a slightly different appetite or level of sophistication to find the level of detail and complexity that's right for them. So if you have the straightforward graphic version, then the blogs, then perhaps some longer articles and some videos, and then ultimately the hero paper itself, that means A, investors can find how far they want to go in the subject, and B, you can avoid those uncomfortable leaps from a browsing on LinkedIn and clicking on a post that leads you straight to a 30-page white paper. You're just not in the frame of mind for that at that moment. So by following all of those tips that Zim lays out, you will build the variety, the richness, and you will enable the layering of content, and back therefore to the slickness of the journeys and the signposting and that rich experience with content that is accessible, is well written, well laid out, well signposted, and therefore a pleasant experience to consume. So there's some really fundamental things there in terms of that segmentation, and then the actual fitness for purpose of the content itself. I'm conscious I haven't talked about the actual technology. I'm going to happily leave that to Andy as the specialist on that side of things.
Thank you, Nick. The key takeaway from that for me is quite shocking, is that 50% of emails sent out is to an undefined audience. It's obviously a huge number.
It is.
And obviously you highlighted that Andy's and to talk about the technology. So Andy, from an operational perspective, what can firms do to differentiate themselves in terms of content, sort of sales enablement, and the execution of their strategy?
Yeah. So I'll sort of reinforce that with some data that we've sort of picked up as well. So one of our customers, who are a global they're over 100 billion AUM asset manager, so sort of mid-range. We implemented Seismic about 2 years ago, and they retired 70% of their content afterwards. And that's not because they were making bad content prior to that. It's because they suddenly had the visibility of which content was landing and working. And by working, we mean moving stage progression in the CRM system that they were using forward. So they had, using our technology, they had the means to understand what was being read, what was then driving consumer decisions or client decisions, and then how that was being reflected in their system of record. So how are they tracking how content was helping them close deals? So again, we've seen a huge uptake in the way that content has been adapted to fit the technology. I pick up on a point that Zim made around being able to use data in a sort of meaningful and consumable way. So I think most of our customers have got access to lots of real-time market data, and being able to present that to clients in a digestible way is critical. So again, when it comes to being able to create or to produce content which is both real-time, meaningful, but not dazzling them with that sort of academic approach is critical. Allied to that, there's also the interactivity. I think that both Zim and Nick mentioned. So being able to have an interactive experience which more closely reflects our preferences as consumers. So not just as clients of an asset manager, but as consumers of everything else in our world. And increasingly, we're seeing that consumer or online digital and consumer behavior dictates the expectations of our customers' clients, so asset management clients. So to us, it's almost a loop, right? Which is, how do you solve the content production challenge first and foremost, using data, making sure you've got the right kind of content, being able to understand what is and isn't working. It's fundamental. Focusing resources, people, time, budgets, etc. accordingly. Really shortening the production time. And again, this is a sort of fairly sort of standard challenge for most of the asset managers that we work with, which is they have a quarterly cycle when it comes to producing content, and being compliant within that quarterly cycle usually is a bit of a time suck. So again, that's an automation thing, right? Which is, how can you automate the production of content so that it's going out on day 3 of the quarter as opposed to day 28. So that's an efficiency, I guess, more than anything else. Then being able to distribute it, and Nick was talking about the way you optimize distribution channels. But if you can do that electronically and through social channels, you then have the opportunity to then measure how that's consumed. Once you understand how that's being consumed, you can then plug that back into your own organization. So what content is helping your relationship managers close deals? And then the loop hopefully starts again. So that's, within asset management, the sort of the standard model that we're now seeing being deployed.
Great, thank you, Andy. I can't believe that there's that firm that you work with and they retired 70% of their content. It's an unbelievably huge amount, obviously, to retire. So it does show the importance of the tools as well as just the content.
Just to add to that, we anecdotally we work with, it's not an asset manager, it's a very large tech firm globally with sort of north of 300,000 employees, and within the first month they actually went through an audit. So within the first month of having that level of visibility, they retired over 1 million pieces of content. So, order of magnitude, it's a fairly common problem, not just obviously within asset management, but also within other verticals.
I mean, again, a huge number, is a million.
Crazy, aren't they? Yeah.
Yeah, incredible. Well, obviously, still on the lines of this, like, digitalization has obviously been accelerated by the pandemic, and the pandemic has obviously fundamentally changed things for both sales teams, the way that they interact with clients and potential clients as well. So, Ximene, how has digitalization changed the role of content in respect to client relationship management, and sort of prospect outreach?
Thanks, Seb. I think that the best way to think of a question like that is, what does the role content play within, what role is it playing in conversion? Because I think we traditionally, as marketers and as salespeople, think that it's got, it serves the purpose for absolutely serving our clients and those that we've already got, the existing ones, because we want to maintain that retention. But of course, we want to use content to acquire new leads and attract new sales from our various different opportunities and the ones that we pitch to. But in a digital prospecting environment, the one that we are now forced into as a result of not being able to have face-to-face meetings, not being able to have face-to-face events, what are our salespeople able to do? The power behind content has monumentally changed. Its role within the sales funnel has changed. And actually, it is something that we've been talking about at Savvy for a while, because we're constantly questioning, okay, which content type is best for the objective that you have in mind? Because some things will be better. We know, for example, all of us know that video or interaction performs really well on social media, for example. But how then do we engage in the other elements? How do we push someone throughout that funnel? And what we have found that typically blogs tend to sit at that awareness phase, which is great for a prospect acquisition, and they sit really lovely down in loyalty phase when you look at that sales funnel, because you've already got that customer, they're already interested in what you've got to say, they're signed up to your blog. So you're tackling those things very, very well. However, interest, conversion, sales and invest, I don't really think that blog quite cuts it. Last year at Savvy, we actually reached out to a lot of our members, and we wanted to find out that question, what's best for your engagement? What do you prefer? And we did find that most of our survey answers came back saying that blogs just don't carry that influencing potential, we'd like to call it, and that's that conversion sales power. But we asked them, okay, if not blogs, what is it? And all of our members, or many of them anyway, over 70%, said that white papers and in-depth reports are the ones that will be most useful and be most influential when it comes to the perception of an asset manager. And because of what we like to call that I factor, that influencing potential, we really think that this sort of longer form in-depth content has completely changed its use within that sales funnel. So it's great for awareness because it will pique someone's interest. There's this new research report out there, and perhaps, as Nick said the other day, you've got your social post that sort of brings out the key points. Then you've got a blog perhaps, and then it sort of builds into that deeper report. But then they start to get interested. It starts to showcase your ability. Then they're beginning to think, okay, perhaps I should convert into and see what they've got else for me. And then you get that sale, invest, and then once again, new research or new reports on your portfolio or your thinking behind that. That's when that's their loyalty element too. And we really think that as a result of the digital prospecting environment, that's where this longer form in-depth content has a really great, interesting part to play within this new world, because that piece of content, that's the salesperson's initial conversation as they pulled someone at an event and they're walking past the stand, for example, or in that one-to-one meeting that they're having. And this content that you're producing is the fuel for their conversation. So more important than ever, content is key to conversion at the moment.
Thank you, Zim. And obviously the other point I've picked up as well is it's important for firms to actually talk to and engage with their audience. So like you said at Savvy, we asked our members, what sort of content is desired by them or useful to them, and where do they see the most useful information coming from. So yeah, again, some very interesting points raised there. And so moving on, the relationship between sales and marketing has clearly changed. What can firms do to deal with this change and ultimately support sales teams? I mean, Nick, would you mind chiming in on this one?
Sure, always my favourite topic, and I really liked what Zim said about being forced to pick up content as an integral part of the sales effort now. I mean, sales team now absolutely have to recognize that it's a significant factor in an environment like this, and I think will remain so, in their ability to do their job. We touched earlier on the different ways they depend on it, whether it's an excuse to call, whether it's that means of staying front of mind when they can't call every week, and then it's the ability to put something really powerful in front of a prospect as to why they should bother having yet another Zoom meeting to hear from a fund manager, etc. And we've seen a number of incidents of asset managers needing help with those really crisp articulations of the strengths and benefits of their investment strategies to help with that justification of meetings with prospects. So yes, sales teams have recognized that they now need us, and for some of us who've been doing this for a long time, that's a really wonderful thing to be able to say. But I think, how can we cement that? It gives us, and I say us as in marketers and the sales team, just a wonderful opportunity to work together along the entire sales funnel, which is a big part of the point that Zim was making, that together we can think about the client's journey, the client's progression, right the way from awareness and your lead gen activities, obviously based on very effective segmentation, and along the client's research process, so much of which has been happening remotely even before any of this happened. So marketing's role was getting stronger and stronger all the time, and this has only served to accelerate that even more. That as I say, we now need to work together from beginning to end, rather than we fill the hopper and then hand them over and off they go. And that's a fundamental shift, and is why platforms like Seismic are becoming just so powerful and so important to be able to facilitate that. And with that, therefore, as we've heard a couple of times now, all of that brings that ability to the track and trace bit, that we can measure marketing's involvement from beginning to end, and therefore come up with genuine measures of marketing ROI. That is no longer a pipe dream. And combined with the fact that we can also bring real insights of client needs and client behavior, both at an individual level for your sales, but also at an aggregate level, that means that marketing can actually get involved in business strategy. And again, there, as a dyed-in-the-wool marketer, that those things are just unbelievably exciting. It's the age of marketing. There we are.
Fantastic to hear. It sounds like it's almost been a positive thing for sales teams and marketing teams. So no, very positive outlook going forward for them. So now one for you, Andy, is how do we know that the content we consider to be good is being utilised properly by sales and by the wider business?
Analytics and being able to track and guide sales processes. So again, referencing the functionality I was mentioning earlier, being able to share a personalized piece of content with one of your prospects is critical. Being able to understand how long they've spent reading each slide or each page is very important, because that prompts then the obvious next action, which is, okay, I pick up the phone, I have a relationship, and that's the most important thing to the relationship manager. And then I can have a guided selling conversation, which is, why was X, Y, and Z important to you? Why is it that you're considering these as potential investments or funds? So that analytics piece is important, both at the individual sales level, but obviously if you aggregate all of those separate analysis and put them back into marketing, marketing then has a full set of data which allows you to make those explicit judgments based on the data that you have, right? You know, this is no longer about perception, or it's no longer about interpretation. It's just data, it's fact. So that's really important. And also I think it does drive that closer relationship. You know, we're not trying to substitute relationships with technology, far from it. We're trying to augment those relationships by using technology at the appropriate places in the sales cycle. And just to support, I think, one of the things that Nick just said, you know, we have been historically, no longer, I'm happy to say, but I remember going into a large, you know, top 10 global tier 1 bank, and we were having this meeting with the sales guys, and they said, this is great. We showed them the demo, and they said, great, everyone signed up. And then we got to that part of the meeting where you talk about budget, right? Who's going to pay for this thing? And they said, well, that's great, but you know, it's going to be something we're going to have to go and shake a tin for with marketing as well. So the obvious question is, well, you know, how well do you work with marketing? And they said, well, you know, we've never really met them, and so, you know, raised eyebrows everywhere. Right? Okay, so you don't really met them, and then because they are a multinational bank, it kind of made sense that the marketing folks might be in a different country or different location. So we made that assumption, and then as we were leaving the building, we said, okay, so it'd be great for you guys to introduce us to the marketing folks. Are they, you know, in the UK or elsewhere? They said, oh, no, they're upstairs. They're in the floor above us. But sales and marketing had never physically met. Right? So it was crazy, the idea that you'd have, you know, these two people, or these two groups of people who ostensibly should be working closely together, were actually in completely different silos and had no interaction, or no official interaction as such. So yeah, I would echo what Nick said, which is it is the time for marketing to take a step up.
Thank you, Andy. It's funny you mentioned that. I can, from previous experience, yeah, you know, I can't recall when I was at asset managers ever meeting or sort of speaking to the marketing team. So that's yeah, a valid point there. Well, thank you all so much for your time. We've had a couple of questions coming from the audience, so if it's okay, we're going to run through that now. The first one I see here is for you, Andy, or the best place for you to answer. Have you seen a considerable increase in spend on tools and technology?
Yes, we have, and I think partly because of all of the topics we've been discussing for the last 45 minutes. You know, it has become a necessity as opposed to a nice to have. I would certainly say that our experience, where we had seen lots of budgets or technology budgets which had been frozen through the pandemic, very happy to say that literally all of ours were maintained, if not accelerated. So I think the feeling was that it then became, you know, certainly with people working remotely, the need to have personalized content, being able to do that at scale, and to plug that into not only marketing and sales teams, but also CRM systems. It ended up becoming Seismic ended up becoming a must-have technology for lots of our customers. So yeah, we actually saw increased demand.
Thank you, Andy. So the next one here, I think would be relevant for you, Zim, to answer, if you don't mind. And it is, are there any hot topics you can recommend from your data that investors want firms to be talking about this year?
Yes, absolutely. And that's another one of those things that we get asked all the time. Now, of course, it wouldn't be 2021 if it wasn't a topic on coronavirus, but more around our recovery, the new normal. I think one of the things that we're really finding that it's not just tell us about how we're going to get out and cope with the new world, but it's more along debt bubbles, economic scarring, inflation, the prospects or deflation, you know, that sort of topic is really resonating. We're seeing a lot of content come in on that sort of side, the impact of raising interest rates, and then also, of course, you know, declining asset return forecasts or capital preservation, these sorts of things really key. I mean, there's something that we want, that our investors want to hear about every year, but I think with that coronavirus recovery lens, and with that, as I mentioned before, sort of non-consensual view where you can angle that topic, I think you would have quite a lot of success. Then, of course, there's thematic investing. I think we're beginning to see this come through a lot. Value versus growth. Is it the new era for this sort of investing style? Will a cyclical recovery undo the growth that we've seen in certain areas such as tech? What else? Developed versus emerging, all these sorts of what you can pit against one another, pros and cons, different views. I think the view-based approach to that thematic side of things is definitely a big sort of top of mind area for investors, along with mega trends. And then, of course, based on the coronavirus recovery, as the inflation story gathers pace, what does that mean then for real assets? So again, using it as a lens to present asset allocation topics or which areas are great to invest in. And then, of course, it wouldn't be what should we talk about 2021 if we didn't talk about ESG, responsible investing. I think that there's a little bit of fatigue around this topic. It's absolutely one of the most curated content topics that we have on our site currently. Anyone is talking about ESG. So in terms of finding the right thing to talk about, we're really keen to see content that sort of who audits the auditors. What about the ESG data, its authenticity, its validation? It's interesting when we get content like that, it actually performs extremely well on our site. Greenwashing, the impact of extreme green bond issuance that we saw in 2020. So what has this big change, this embracing of ESG done, and how's that going to change the landscape going forward? I think a lot of sort of backward looking forward projection again would do really nicely. But I do think that, as ever with ESG, you really got to be careful that views and engagement is really under pressure because of the volume that we're seeing. So I would recommend that firms are really thinking about their position and their USP when it comes to their ESG content.
Thanks, Zim. Without doubt, obviously, ESG is very much the hot topic, certainly of the previous year and for the foreseeable. And this obviously takes me nicely onto another question asked, which I think would be great for you to answer, Nick, is how can asset managers differentiate themselves from an ESG angle?
As we've just seen, that's a good and difficult question. I think perhaps the first thing is we all know of the risk of greenwashing, but just fundamentally that point about credibility and authenticity and not overclaiming. If you are out there presenting your ESG credentials as, we've got it sorted and we've been doing it since 1932. Well, no, you haven't. And no, you haven't got it sorted. It is a rapidly evolving beast, and is an issue for the world that's obviously going to be around for, probably forever. That it's something we should all be working towards, and that little bit of humility as to, yes, we can do a better job. Here are the steps we're putting in place. Here's what we're working towards is going to be far more credible and accessible, and I think engaging for people to read. And so if you want to differentiate, I would suggest actually don't differentiate by getting it wrong, by just claiming that it's a done deal internally. Another important angle on that we're seeing on the ESG side is about, it isn't just about how you invest. Increasingly, the focus of investors is also on how you do business, on your own CSR. So we need to make sure that your corporate behavior is aligned with the public messaging around your ESG policy at an investment level. Those two need to be consistent. You need to be scoring well on your own measures. I think it was Square Mile published a poll recently of wholesale distributors in the UK who I think 80% of them declared that ESG should start at the company level and not just be that opportunistic product push. And that's powerful stuff. It's a huge amount of buyer appetite. We know that the stats are off the scale, but it as Zim recognized, it speaks of that growing cynicism in something that is still incredibly young, but obviously is so widespread so quickly. And I think that's a real lesson there. And I think the other thing that the groups who are doing really well here are doing something we talked about earlier, which is just the richness and mixture of the format of what you're putting out there. We've seen how important it is, but that's being really well illustrated in the groups that have succeeded here. They're using surveys, obviously just rich data from an editorial point of view. It might be surveys of investors and their preferences. It might be research and surveys on investee companies and how their behavior is changing, et cetera, et cetera. We've talked, and I think it's intriguing to hear Zim's comments on the use of blogs. And I totally get that around their role at the top and the bottom. I think, I kind of see blogs are almost coming into their own in the ESG space, because there's so much to say that and so many interesting little stories that you can tell. So the whole area really lends itself to an interesting weekly blog that obviously pulls people through your deeper research. Training and CPD, we know that kind of content is always well read. It presents the opportunity for you to present your credentials as leading the way in this. That think Aviva doing a good job on that, for example. And then finally, we see these ESG annual reports that people do. And as we touched on, while there isn't that data, and yes, we need to audit the auditors, but while there isn't the ability to of a standard measures of the responsible profile of the portfolio and how it's being measured, then storytelling and reports of progress are going to be one of the most powerful ways to get your story out there. So those ESG reports, and then all the activity you can do with all the individual stories within them, I think are a powerful way of doing that. Effectively, what that's saying is tell stories. This really lends itself to great case studies of where things are making a difference. And as I say, while we still lack the ability to benchmark these things, that's going to be the way to get your story out there. Use storytelling to make a difference. Hopefully that's useful. A number of different things that people can do in what is a challenging space.
Thank you, Nick. Yeah, you've highlighted some really, really good key points there. And I think it's a good point that you also raised about firms saying that, they've got the ESG thing sorted, because like you say, it's a constantly evolving space. And, firms are going to always have to evolve with it, because it's going to be ever changing. But yeah, that's unfortunately, that's all we have time for on the question front. But I'd just like to thank Andy, Ximene and Nick for their time today. I've certainly enjoyed hearing all of your points and comments. And so yeah, thank you for your time. And now I'm going to pass back over to Lucy.
Thanks, Seb. That was absolutely wonderful, Ximene, Nick and Andy. A really interesting session with some great takeaways for our audience. So thank you so much. I hope you've all really enjoyed today's session as much as I did. Please be sure to download any last minute resources in the top left hand corner that you'd like, and send in any last minute questions or emails and fill out that survey. We would really appreciate it. Thank you so much. The session is going to be available on demand, and you will be emailed a link with that tomorrow in case you'd like to watch it again or send it on to any colleagues or friends. Thank you so much, everyone, for watching. We look forward to seeing you in the next webinar. Bye-bye.